Hey everybody, Boris from Forex. Welcome to the weekly technicals for June 10 to June 14 in the majors, euro dollar, dollar yen, and pound dollar. The big question this week is risk on, is it back on? We've obviously had a very risk on relief weekend. Trump backed away from tariffs on Mexico, which provided a tremendous support for dollar yen as we opened up and gapped up in trade today. And generally, equities traded relatively well. The next big question this week is really going to be, unless he again sort of upends the markets, the next big question is going to be whether the markets start to feel like U.S. is going to try to become more conciliatory as we head towards the G20 to try to do a meeting with the Chinese and change the whole rhetoric and tone away from a hardcore battle with China to perhaps doing some sort of a deal. Remember, ultimately, it really feels like Trump wants to do a deal. The market begins to feel this, and that could reverse the terrible risk-off flows that we've had over the last few weeks, and therefore provide certainly some relief for the dollar yen and dollar Swiss pairs as U.S. yields begin to creep up. Having said this, though, as we start the week, the currency pairs are essentially in the same region that they were at the end of the week. We've basically have Euro 112 to 114. The 114 is a very significant breakout mode. We'll take a look at the charts here, and I'll just show you exactly why that's going to be a very tough road to travel. Dollar yen has a reasonable chance on all of this positive sentiment to try to trade to 109, especially, and this is the critical thing, especially if U.S. data just doesn't really look horrible. I mean, the U.S. data was weak, the non-farm payrolls were weak on Friday, but not depression-like. And at this point, the market is really priced in a depression-like conditions on the U.S. credit cycle and the credit curve. And I think certainly the thinking here is that we're going to get a little bit of a relief rally. That in turn should really provide some flow to the yen crosses. And cable is its own idiosyncratic mess. I can't even get my hands around it at this point. The Tory challenge is going to be 10 different challengers. Nobody really knows who's going to be the leader, and whoever is the leader, it's unlikely it's going to be some intelligent, rational, conciliatory figure. Somebody like Boris Johnson is only going to exacerbate and essentially, I think, accelerate the possibility of a snap election in UK, which actually probably would be viewed as a positive. In the meantime, the data at UK was horrible. And we can take a look at the calendar right now and just see how Kathy was projecting, but we've already had the first data set. All of this data set was just well beyond negative. And we, of course, we're actually very bearish going into it tonight. And tomorrow, we're now going to be very bearish, all of the UK employment data, as a result of the fact that the manufacturing and GDP data was just completely below par. So very likely that what we're having here is this Brexit paralysis in the UK economy that in turn has really frozen all sorts of activity and probably going to create much more severe economic pain than anybody has been handicapping before. That's what makes cable such a weak currency at this point relative to everybody else in the majors. We also have US PPI data tomorrow. That we're also mildly bearish because they've had declines in energy and food and costs. But the critical question here is just how bearish. As long as it stays within 10 basis points, 20 basis points, it's not going to have much of a material impact. If it goes negative, and that's really the big thing, if PPI turns negative, that certainly provides scope for a Fed rate cut, and that certainly could really drive dollar yen right back to the fat finger lows. Wednesday, we get the CPI data, and then actually, well, we'll talk about that in the calm down, so I'll skip that for now. Then into end of the week, the big event on the majors side is going to be the U.S. retail sales data. We don't have a clear call on this because we've had Redbook, which looked like an uptick in retail sales. We've had retail stores and Target, Walmart, and the sirens. Unfortunately, today we have more sirens than usual in New York City because there was a big accident just as I was at CNBC today with a helicopter making an emergency landing. You may have already heard about this when you guys watched this. So Midtown has really been sealed off. Anyways, retail sales is a hard call to make, but that is a make or break trade in my opinion as far as risk trades go. If that proves to be positive, that really gives us tremendous tailwind, not just for this week, but maybe for the next week as a trade up in dollar yen. So let's take a look at the charts here and just see how everything is setting up. So euro is still looking very, very bid. We took the 20 a couple days, really last week, and have held bid above 20. It's very natural for us to kind of come back and contract a little bit. But the really, big story here is that the move down underneath the 1300 was pretty much bought most of the day. And as long as we're going out right now into Tuesday night to you guys, or Tuesday morning to you guys, Monday night to us guys, relatively well bid on the euro, and all we need to really extend this this positive trade is a run back through the 1350s. That's the 1350 highs here. Now, once we take out that, then it becomes a much more difficult level to clear. This 1400 has a double top resistance, and that makes it a pretty serious move. But I think the key thing here is if the market can feel strong towards moving it through the 1350s, it's a very powerful move on the euro. The reason why the euro, of course, has been trading relatively well is because I think the market is just, it was grossly oversold. ECB was not nearly as dovish as everybody thought they would be. The flow here, the thinking here is that if US doesn't fall off a cliff, Europe actually does relatively well, ironically enough, because of the substitution effect. The Chinese may begin to channel more business towards Europe than they do towards the US in terms of substituting European technology for American technology. That obviously helps the European economy. But for now, I think the technical drivers here is that we've had a nice strong bottoming formation for quite a long time. And now we are truly in an uptrend. All we need is just a power move through the 1350s, and that really creates even more of a short covering as everybody scrambles. There's a lot of late shorts that are kind of holding out, I think, as this final capitulation level of 1400. If they can squeeze them through that, it's going to be very difficult to see the euro not run away at that point. Pound dollar, on the other hand, as you can see, much weaker. The echo data really knocked it out. If we have bad echo data tomorrow, at this point, the market is really not looking for anything positive. So hard to imagine it's going to get very badly hit. But essentially, what we're doing is possibly retesting this double bottom here at 2550. That seems to be very much the key support level here. This level basically is the supposition that we either get some kind of a decent Brexit deal with a customs union, or we get a new election and basically don't even have Brexit at all as a fresh referendum renounces the deal. So I think that's really the Maginot Line and cable, and whatever economic data that we get that's negative is just noise, mild negative noise to the downside, but not anything that's going to really drive us, to the lows. Only a significant political risk of a hard Brexit takes us below those levels, and so I think that's kind of we have to play it that way. And yen, we're looking at we opened it up. I think yen. It's almost important to take a look at the 5-minute chart here, which I almost never do, only because what's going on in the yen here is we've had the gap open, and generally you want to, typically what you have is a fill of the gap open and then kind of a resumption of that upward impulse. So far, we actually have not had the full fill. I mean, if you look at this, what was the close here? That was the 19. We dropped close to 30, 31 as kind of an attempt to fill. But what's going to be interesting is tonight's or tomorrow morning's data to you guys, because if we start pulling back away and we start taking, especially if we can take out the overnight highs around 70, that's going to create a runaway gap. Runaway gaps are much more powerful signals, meaning that if they don't get filled within 24 to 48 hours, the continuation prospects are actually quite strong. So if we can get a runaway gap out of dollar yen, that provides a scope to run all the way out to the 109.25s or even 109.50s as a potential short covering rally comes in here. A lot of it obviously going to be dependent on this, and this is actually flowing our way. We bottomed at 215, bottom at 210. US 10 years at 215. If we see 220 sometime this week, it's almost a given that we'll see 109 on dollar yen on those kind of flows. So that's pretty much how the majors shape up. Wish you guys the best luck, the best trading. Boris, over and out.